in New Jersey. Registration is not an endorsement of the firm or its representatives by securities regulators, nor is it an indication that the advisor has attained a particular level of skill or ability. Investment advisory services may only be provided to clients in jurisdictions in which the firm and its representatives are appropriately registered or exempt from registration. You should not assume that any discussion or information contained in this broadcast serves as the receipt of or as a substitute for personalized investment advice from the advisor. Different types of investments involve varying degrees of risk, and there can be no assurance that the future performance of any specific investment strategy, or product, or any non-investment related content made reference to directly or indirectly in this broadcast will be profitable, equal any corresponding indicated historical performance level or levels, be suitable for your portfolio or individual situation, or prove successful. Past performance is not indicative of future results. Investment advisory services offered through Wealth Quarterback LLC. Losing money in the stock market roller coaster? Frustrated with the government taxing you into oblivion? Worried about inflation? How do you prepare for so many financial uncertainties? Welcome to the show that will help you develop your game plan. The Financial Quarterback with Josh Jalinski. Josh is a noted financial advisor and president of the Jalinski Advisory Group, and he's here to answer your questions. Call into the show at 800-321-0710. 800-321-0710. Now, let's kick off your financial future. Here's Josh Jalinski.
Good morning, America. This is Ernesto Caleri. I am Josh Jalinski's wingman, and you're listening to The Financial Quarterback. It is the must-listen-to radio show for all things money, from tax savings, wealth management, retirement planning, and a little relevant dose of politics, just to put it all into perspective. This morning, we have a very special guest. It is Dr. Lacy Hunt. Dr. Hunt is the author of 2 books and numerous articles in leading magazines and periodicals, including Barron's, The Wall Street Journal, The New York Times, The Christian Science Monitor, and more. Dr. Hunt is also the executive vice president and chief economist at Hoisington Investment Management Company. He's made numerous presentations in all the major financial and economic centers in Europe and Asia, and he's appeared on radio and television outside of the United States, including the BBC, NHK, TV Tokyo, and he's testified before various committees of Congress, including the House Ways and Means Committee, the Senate Finance, and Senate Banking. So, good morning, Mr. Hunt. Dr. Hunt, can you hear me?
Good morning. I certainly can.
Great, fantastic. Would you give us, I know I gave you a nice little opener. I'm fascinated by your background. Would you give us a little more of your background, please?
Well, I received a PhD in economics from Temple University in January of 1929, in January of 1969. I went into the Federal Reserve at Dallas. At that time, William McChesney Martin was chairman of the Fed. And when I left the Dallas Fed to join Chase Econometrics, Arthur Burns was chairman. People don't really remember those names, but they were outstanding Fed leaders. I was an econometric model builder. Built a large, probably the first large-scale econometric model of the financial markets, credit markets. Chase Econometrics was a subsidiary of Chase Manhattan, and in those days, Chase Manhattan was run by David Rockefeller. And from there, I became the chief economist for the largest bank in Philadelphia. For 15 years, I was the chief U.S. economist for the HSBC Group, formerly the Hong Kong Shanghai Banking Corporation, which at the time was the largest bank in the world. And I've been with Hoisington Management now since 1996. I've received numerous awards, including the Abramson Award for my contributions to business economics. I've published in the scholarly journals such as the Journal of Finance, the Financial Analysts Journal. I served for 23 years on the board of trustees at Temple University, and I'm an honorary life trustee of the board at Temple. I received their distinguished alumni award in 2018. My undergraduate college, Sewanee, awarded me an honorary doctorate of civil laws in 2013, and then they recognized me as their distinguished alumni in 2016. So, been around a long time, seen a lot of things, and I really enjoy economics.
You have one of those backgrounds where, thank goodness, it's one of the professions where age and wisdom is actually appreciated. In your background, you've worked with David Rockefeller at Chase and then Sir William Purvis at HSBC. Can you give us some insight what it was like to work with those two great titans?
Well, it was a wonderful experience. I was in the econometric subsidiary of Chase Manhattan. I was their director of monetary economics, and I was producing forecasts with an econometric model for about 100 financial variables. And it was David Rockefeller who first invited me to attend the Asset Liability Committee meeting of the old Chase Manhattan. And I had an opportunity to do a few projects for him. And it was a very great experience to be in the presence of such a man. And, it was very important. In the course of my time at the Federal Reserve, I served with the major macroeconomists from all of the Federal Reserve, regional banks, as well as the Board of Governors and the New York Fed. I did the training program for regional bank economists at the New York Fed. While I was doing the training program, I actually lived at the New York Hilton for about 5 weeks. Took the subway down to the Fed in the Wall Street area, and I served on 2 Federal Reserve System committees: the System Committee on Financial Analysis and the System Committee on International Analysis. One of my professors at Temple had said to me that I was going to have to embrace international economics and finance. And this, keep in mind, this was in the 1960s. And the professor said that we're going global and you're going to have to do it. And that was one of the things that proved very beneficial to me, because I was equally able to operate with domestic macro and global macro. And that's where I've worked, and that's where I've concentrated my entire career.
Wonderful. Well, good morning. This is Josh Jalinski, the financial quarterback, and Dr. Lacy Hunt is joining us. It's interesting to learn about that. So good question, Ernesto. So you recently did an interview for Real Vision where you talked about a disinflationary stew. The question that we always ask is deflation or inflation. Apparently, you think we're at a disinflation. Describe that a little bit. I mean, I'm worried about, a lot of people are worried about hyperinflation right now, with lumber being 150%, real estate going up. Enlighten us, Dr. Hunt.
Yes, I have a very lonely view, Josh. One of the reasons I think that people think we're going into inflation is that we're going to have very rapid economic growth this year. And in real per capita terms, the economy will probably grow the fastest since the early 1980s, possibly even since the late 1950s. However, I think the inflation rate is still going to come down. I can give you several reasons. First of all, inflation is a lagging indicator. That's the way it's classified by the National Bureau of Economic Research. Between the start of the recession and the low point in the inflation rate, the gap is almost 4 years. If the inflation rate were to start rising at the beginning of the recovery, it would start building imbalances into the system. And so it's a lagging indicator. Another consideration is that after very deep recessions, such as we had last year, there's been a very strong recovery in productivity. We saw this after the deep recessions of 1949, 1958, the deep recessions of the early 1980s. And in all three of those cases, the productivity gain was so large that unit labor costs were unchanged. Another consideration is the pandemic itself. The pandemic disrupted supply chains, and the low-cost producers of goods in Asia were not able to move their product into the United States. And as a consequence, the high-cost producers in the U.S. were able to increase their market share. In fact, the pandemic did more for domestic producers than the tariff increases that were instituted by the prior administration. And so now we have a situation where the low-cost producers in Asia's market share has been reduced. The market share of our domestic higher-cost producers has been raised. And the low-cost Asian producers are going to want to try to hold market share. Our domestic producers whose fortunes have been changed as a result of the quirks of the pandemic will try to hold, and we will see price wars on a lot of goods.
So price wars meaning prices will keep going up, or eventually they'll start going down?
No, they'll be cut. Prices will be cut to regain market share.
So if I'm looking to buy a house, hold off. Wait a couple years. The disinflationary stew may be upon us. So Dr. Lacy Hunt, one of our all-time favorite guests, going to be talking about inflation versus deflation, what he sees as economic headwinds on the horizon when we return. And folks, head over to the YouTube channel, search for The Financial Quarterback, and you'll find us. And give us a call, 888-988-JOSH, if you want the retirement reality check. It's a 45-minute strategy session with me, Josh Jalinski, the financial quarterback, and more when we return with your questions at 800-321-0710. Don't touch that dial.
It's always on your mind. Retirement, whether you're 55 or 35. Not everyone wants to work forever, and most would like a comfortable retirement. You may already have a plan, but is it the right one? Josh Jalinski, host of the popular Financial Quarterback radio program, is ready to guide you towards financial freedom. He challenges the ways your parents and grandparents saved money with fresh strategies, which are exactly what you need to navigate today's volatile economic climate. Josh's new book, Retirement Reality Check, is available to order on Amazon. It's an easy read that guides you through his system for securing your financial freedom, including tax-saving strategies, understanding the right investment mix, and more. Order now. Retirement Reality Check. Call Josh at 888-988-JOSH. Let Josh help you map out your retirement using fresh strategies. Call 888-988-5674. That's 888-988-5674.
Hey, meet you out on the first tee?
Yeah, I'll be right there. Just reading this article.
On what?
New bill Congress passed. Looks like it's going to affect the value of all retirement savings plans. My financial guy didn't tell me about this when I saw him the other day.
Well, my guy did, and we made a plan. You may have heard of him, Josh Jalinski.
Josh Jalinski is your guy?
Listen, if you're 10 years or less from retirement,
Which I am,
Josh will give you a free economic plan, which includes retirement planning, a 27-point checklist to make sure your income lasts as long as you live. He'll even help you navigate the current tax code.
I'm definitely going to call Josh.
Cool, but first, can we play some golf?
Call Josh Jalinski, host of the popular Financial Quarterback radio program, for your free economic plan. 888-988-JOSH. 888-988-JOSH. 888-988-JOSH.
This is Josh Jalinski, the financial quarterback. We are now on Instagram Live. Instagram. What is our Instagram handle, Ernesto?
We are the Financial Quarterback.
Okay. Will you, so give us a call, folks, 800-321-0710, 800-321-0710. So even though lumber, steel, all these costs of goods have gone up, you think that's really a function of just supply chain issues? When does that correct itself and we start having the price wars, as you say? Dr.
As we still have some of these supply chain disruptions with us. They have not been corrected, but as more people are vaccinated, so forth, more immunities, the supply chains will be reinstituted. And once that's the case, we're going to be operating with a substantially different degree of technology than was in place a year ago. The old saying, necessity is the mother of inventions, and in crisis situations like we were in last year, we've seen this in many wartime situations. Technology that would have been implemented over the next 4 or 5 years are brought forward in time. And so the technology is of a much higher level. And that means that the productivity gains will be larger. And as a result, that will also contribute to the lower inflation rate. Individual sectors may have inflation, such as we're seeing in the housing sector. But on balance, the inflation rate is going to be coming down, and there are a couple of indications. The supply chains were the most disrupted in the third quarter, and particularly in June, July, and August. And during that 3-month time period, the core inflation rate was close to 4% per annum. And in the last 3 months, we've come down to only about 2%. And so as the price wars emerge, and as the greater technologies and the higher productivity kick in, I think that this transitory surge in inflation that we're seeing, which is called a base effect inflation, will pass away. And when the year is over, I think the inflation rate and the core measures will be under 2%.
So if you're building a house, wait till next winter. We might have an economic winter.
I don't like to give advice on individual sectors, mainly because I think that there are vast regional differences. And one of the things that's happening in the United States today is we're seeing a massive shift of populations.
Yeah.
From East and West Coast areas into parts of the South and the West. And
yeah, you see that with Larry Ellison. Larry Ellison just bought an $80 million mansion in Palm Beach. He was said to have gone to Hawaii, and he was living in Hawaii, but maybe not anymore. Yeah, but that in one sense. That in one sense is a consequence of deflation, is it not? You have people not making what they used to, so they want to move down south and get an instant 8 to 10% bump in their standard of living?
Well, I think that's part of the motivation. I also think that this is a little bit tricky economically, but the GDP measure in the current situation is a flawed measure. It reflects what's known to economists as the fallacy of the broken glass. And it's easy to think that if someone throws a rock in a window pane of a shop, that will boost the GDP because the shop owner has to replace the glass. He has to hire some people, draw down his saving, and so forth. And as a result of the pandemic, there's a lot of broken glass. There are vast components of the U.S. economy that are just not going to be able to play the role that they did historically. We have more office buildings than we need now. We have a lot more retail space. There are also serious geographic imbalances. And as the economy is recovering, as it is today, and you can see that in the statistics, that will be captured in the GDP. However, all of the damage to the various components that were put out of business by the pandemic will not be counted as a loss. And because of the fallacy of the broken glass, a lot of your aggregate economic indicators are not a true measure of the economy's underlying strength. And so when we take into account the change in technology, the resumption of supply chains, the higher level of technology, I think we're going to see the inflation rate come down. It's going to go up over the next few months because a year ago we had actual deflation. But as this base effect inflation wears off, I think the trend in inflation is going to be decidedly downward.
So what are we to do? Are we going to have, I said we would have inflation, then deflation, and I guess that's what's happening. But are we going to continue to have the economy heat up, real estate prices go up? I mean, really everywhere we're seeing this. Is this like hyperinflation before deflation, or are we going to get zeros added by the Fed? I mean, they spent $9 trillion within the last 12 months, where they only spent, $1 trillion in the last crisis. Now they're just going to start adding zeros, universal basic income. I mean, I guess that's the counterpoint to deflation, right? That they're just going to keep printing.
It is the counterpoint. You correctly stated very well. But keep in mind that this $9 trillion was all done with borrowed funds. And what we've learned, Europeans have learned, the Japanese have learned from the history of the world, that when you undertake these programs financed with debt, the economy receives a transitory boost. The boost lasts 1 quarter, maybe 2 quarters. But then the debt becomes a drain on economic activity. Let me give you a couple of examples. In 2009, there were the shovel-ready projects financed with debt. They gave a boost to economic activity we had about 2 reasonably good quarters. The tax cuts that went into effect in 2018, we had 1 very good quarter, the spring of 2018. The third quarter of 2018 was fairly good, but the growth then began tailing off. And the net result is that when economies become more and more indebted, such as we are, it's really a process of slow economic deterioration and disinflation. And we can see this in the relative performance of the major economies of the world. For example, the United States is now more indebted than we've ever been in our history. However, Europe, our public and private debt, everything included, is about 400% of GDP in round numbers. In Europe, it's around 500% in round numbers. And in Japan, it's around 650% in round numbers. So what has been happening, and it's clearly evident, that the United States is performing much worse than it has done historically. From the beginning of our republic in 1800 to the late 90s, when we became very indebted, our real per capita GDP grew about 2.2% per annum. And since then, we've only been growing 1.2% per annum. So we've lost almost 40% of the growth, which is the key to the standard of living. just to give you an idea, if we had compounded at 2.2% since 1997 instead of 1.2, the GDP in real terms per person at the end of last year would have been 25% higher than it was. So we're not measuring up, and the key element that is pulling us down is this debt. While it has this initial benefit, the benefit doesn't last long. And in Europe, which is where debt is about 500% of GDP, they're performing even worse than we are. And in Japan, where debt is approximately 650% of GDP, then they're performing worse than Europe. And so these differences are mattering over time. It's one way to sort of think about it is the path to high debt. It leads to a process of slow strangulation. The world doesn't end with a bang; it ends with a whimper, and the growth the debt just grinds lower and lower. There are these intermediate episodes, such as we're experiencing now, but they don't last very long.
So what do we do? Is there any hope for improvement on the horizon with expanding debt?
Well,
we talked about this last year. We've talked about this for years to some degree. The tax cuts weren't stimulative enough because they weren't like a 25 or 28% marginal tax cut. And now, $9 trillion later, we're still here, barely at inflation. So what do we do?
Well,
what do we do as a country? Like, are we going to head?
Well, the answer, the academic studies give us the answer, but the answer is not politically acceptable. Perhaps one of the leading researchers on the debt situation is McKinsey Global Institute, part of a McKinsey organization. And in 2010, they looked at 24 advanced economies that became extremely over-indebted. They started with the buildup of debt, the crisis situation, and then the unwinding of the problem. And they pointed out for the advanced economies that in all 28 cases, it had to be solved by a sustained period of austerity, which McKinsey defined as a significant rise in the net national saving rate, which would be the saving of the government, the household, private sector, and the foreign sector. And the problem is, in modern democracies, no one's in favor of austerity. And so whenever a crisis comes along, whatever it is, failure of Lehman, of recession, pandemic, the solution is to take on more debt. And you can say that it's socially responsible, you can say that it's politically popular, but the net result is that after this transitory lift to economic activity, the economy grinds lower, not higher. And so to think of it this way, when you're taking on more debt, you're living beyond your means. And if you try to solve an indebtedness problem by taking on more debt, you make yourself worse off. The solution has to be living inside one's means. And I'll give you just two examples of these 28 countries where they had to use austerity.
Well, let's talk about those examples when we return. This is Josh Jalinski, the financial quarterback, and I don't know about you, but it makes me want to dust out my portfolio and review things. So call us at 888-988-JOSH if you are concerned about the prospects of deflation when we return. 888-988-JOSH, 888-988-5674. We'll be back after these messages.
Are you worried about the recent coronavirus crisis and how it may have affected your money? Hi, everybody. I'm Josh Jalinski, the financial quarterback, inviting you to join me for my complimentary 6 Ways to Keep Calm During Turbulent Markets webinar. If you schedule and keep your no-obligation webinar today at 888-988-JOSH, it's a great thing to do. If you're stuck at home under stay-at-home orders, call us right now, 888-988-JOSH. If you're bored, there's never been a better time to get a second opinion on your wealth than right now. 888-988-JOSH, 888-988-5674. And go to my website, retirementrealitycheck.com today and take your free investment profile quiz. And when you buy my book, you're eligible for 3 free gifts. 888-988-JOSH.
Call Josh Jalinski, host of the popular Financial Quarterback radio program, 888-988-JOSH.
Okay, we're back. This is Josh Jalinski, the financial quarterback, coming to you live with Dr. Lacy Hunt with any of your questions. So, Dr. Hunt, so all this sounds very bad for the economy. What is an investor to do?
Well, basically, what we're continuing to do is we try to solve an indebtedness problem by taking on more debt. The economy's long-run performance continues to deteriorate. There's basically no way out of it. So you just grind lower and lower and lower. The risk is that down the road, there will become a general awareness that the debt only provides this very short-lived boost. And then, and we look back over history, we find cases where governments take rather extraordinary and what are foolhardy measures. For example, Germany was very indebted after the end of World War I, and to try to pay their debts, they made the liabilities of the German central bank legal tender, medium of exchange. And then, of course, it generated very rapid inflation and completely destabilized the situation. The same thing happened to Chiang Kai-shek's China in 1935. It's happening in a couple of countries in Latin America today. And so the risk is that you go to what is outright money printing. Not today. The Fed's liabilities today are not money. They have a transitory boost on the money supply. But if we made the Fed's liabilities medium of exchange and the store of value, then you would trigger Gresham's law. And the bad money would chase out the good money, would go into rampant inflation, and everyone would then become truly miserable.
Isn't that, what's the likelihood of that happening?
Well, I don't know. It's hard to say. When the Federal Reserve was set up in 1937, after we exited the gold standard, the Fed was set up to be the lender of last resort. The writer of the Federal Reserve Act, Senator Glass of Virginia, did not want the central bank of the United States to become a banana republic. And so the Fed was given great lending powers, but not spending powers. Now, today, we have proposals that are on the table that would create a virtual account for most adults, and then we would fund it with the Fed's liabilities. That would be the equivalent of true money print, which is what Germany and China and many others have done. And you would go into rampant inflation, and it would be very difficult to operate, very difficult to operate. The current Fed chairman holds his job until the end of January of next year. He said that he is committed to the Fed's lender of last resort, not spender of last resort. And so I don't think it would happen in the next year, but a new chairman of the Federal Reserve might go in a different direction. Now, to do that, the Federal Reserve Acts would have to be rewritten. And that would be a process that everybody would have some say in it. But it would be just hard to see how it would unfold.
But nobody
there are
has say in
people
anything.
advocating that we go in that direction. But in my opinion, it would be taking us from the frying pan into the fire.
But it looks like that's the only way out of this. They're going to give everybody, universal basic income if you have a certain income below a certain threshold at the next point of crisis, whenever that is, 12 to 18 months, 2 years, whenever this runs out, the sugar high that we're experiencing in the economy. I don't really see any way out other than that. I guess that's why Bitcoin is rising. Although if we have deflation, Bitcoin will be falling. What do you make of the rise in Bitcoin relative to all of this?
Well, one of the critical relationships that the GDP, or total nominal spending, is determined by both the amount of money in circulation and the velocity of money, or the speed at which it turns over. This is called the equation of exchange. It was originated by Irving Fisher. And Fisher said that when economies become extremely over indebted, such as we are, the velocity of money falls. And in fact, the velocity of money in 2020 hit a new all-time low. We have data back 120 years, just as Fisher said. So the Federal Reserve came in. They engineered a very large increase in the money supply. In terms of the GDP, it was neutralized by a fall in velocity. So when the Fed increases the money supply in the 20% range, which they did last year, but the velocity of money falls, the money is basically trapped in the financial markets. And so there's plenty of liquidity to bid up financial assets and assets that are financed by a lot of leverage, such as housing. However, that money does not make it into the real economy. And there is actual corroborating research from some pretty serious economists. For example, the Nobel laureate Michael Spence has pointed out that when the Federal Reserve engages in these asset purchases, and when they come in to support the value of financial assets, it gives a signal to the corporate managers that the financial assets are protected. So in a crisis, you can always sell your financial assets, and their value will be relatively secure because you can count on the central bank. However, real assets are not protected. And so the corporate managers are shifting more and more of their resources into financial investments. That's why the prices of so many of these assets are quite high. However, financial assets don't grow the economy. You need investment in plant and equipment, real assets. And so the policy result shifts more and more assets into the financial economy and less into the real economy, which undermines our capacity to grow, which tells us the same thing that's happening to the velocity of money.
Yeah, in essence, really that's a great point, because in Bitcoin there is no velocity. So
Bitcoin is
the absence of velocity.
That there is excess liquidity in the financial market. I mean, Bitcoin does not have a stream of future earnings, such as a stock or a bond. So there's no way to calculate net present value. It's not a store of value like gold or silver or platinum. So to my way of thinking, it's another barometer of the fact that when you have large increases in the money supply and a shift of resources into financial assets away from real assets, all of those assets are going to be bid up. It's a barometer of excess liquidity. And that's the best explanation that I can give you.
Yeah, I mean, technically, it looks like Bitcoin's going to hit 100,000. So what do you make of that?
as long as the liquidity continues to pile up, then it's going to go into the financial assets. But the presumption that it will make it into the real economy, other than for a transitory period, is, in my view, not correct.
So what do you do with your money? I mean, I know you're a big fan of U.S. Treasuries. You're still long Treasuries. When do you see rates start going up?
Well, I just told you earlier that inflation is a long lagging indicator. The gap between when you have a start of a recession and the low point in inflation is about 4 years. Well, the recession started in February of 2020, which means the inflation rate ultimately, although it's going up right now, is going to tread lower in 2023, 2024. There is a presumption that because we have rapid increase in the money supply and the Fed is buying $120 billion of government and agency securities every month, that this is stimulative. However, there are other stools there are other legs of the monetary policy stool, and they're not working. One I've mentioned, the velocity of money is falling. Another stool of monetary policy is the policy rate, the federal funds rate. And historically, the policy rate has been a major tool. In economics, prices are a very powerful variable. Prices are what cause people to change incentives. And the policy rate is stuck at zero. The Federal Reserve says that they're opposed to negative interest rates. And so consequently, the price mechanism is not working. But historically, from the start of the recession to the low point in the policy rates, you're talking years, 6, 7 years in some cases. And so that the policy rate or the price mechanism is no longer there. The final stool of monetary policy are the banks. Now, the banks have unprecedented amounts of reserves. And many people who took one course in economics would say, well, if they've got the reserves, the bank will lend them. However, that's not happening. And I don't believe it's going to happen because the banks can have reserves, but to lend them, the bank has to cover all of its costs, including the risk premium, which is the possibility that the borrower will default. And the borrower must pay the risk premium. And so the risk premium in this environment, in spite of the recovery in the economy, is going up. And the net result is that bank loans are falling. So of the four stools of monetary policy, you have the quantitative effects, the first round increase in money supply, that's working. But the velocity of money is falling. The policy rate is out of commission. And the banks in the current environment cannot price through the risk premium. And the net result is monetary policy is not nearly, and it's not powerful. It's basically emaciated. And that's exactly what happens when economies become extremely over-indebted.
So we're going to be like Japan for the next 20 years?
We're proceeding on the same path. And by the way, it's not just Japan that is proceeding on this course, it's Europe too. Since 1989, Japan has adopted maybe 30, 35 debt finance programs. Europe, not quite that many. And by the way, when your economic growth rate comes down, there's also a collinear deterioration in demographics. The population growth slows, the birth rate falls, family formation rate falls. The growth in U.S. population last year was the slowest since 1918, which was the pandemic year as well.
Well, we may have the highest, though.
Historically, our population has grown about 1.2% per annum. Last year it was 0.25.
Well, let's take a short break. We'll talk about that when we return with Dr. Lacy Hunt, and I'll ask him, what about all these COVID babies? Could that stimulate the economy? When we return, this is Josh Jalinski, the financial quarterback. Don't touch that dial.
Josh Jalinski, the financial quarterback here. In these uncertain financial times, it is imperative that you guard your financial future. If you call within the next 3 minutes, we will offer our complimentary bear market survival guide, which will detail steps to help your plan to potentially survive the COVID-19 crisis. The bear market survival guide will cover how you might still be able to retire amid a volatile economic climate. We will throw in our complimentary 27-point ultimate game plan for retirement. Call us at 888-988-JOSH, 888-988-5674 for your bear market survival guide.
Call Josh Jalinski, host of the popular Financial Quarterback radio program, 888-988-JOSH, 888-988-JOSH. It's always on your mind. Retirement, whether you're 55 or 35. Not everyone wants to work forever, and most would like a comfortable retirement. You may already have a plan, but is it the right one? Josh Jalinski, host of the popular Financial Quarterback radio program, is ready to guide you towards financial freedom. He challenges the ways your parents and grandparents saved money with fresh strategies, which are exactly what you need to navigate today's volatile economic climate. Josh's new book, Retirement Reality Check, is available to order on Amazon. It's an easy read that guides you through his system for securing your financial freedom, including tax-saving strategies, understanding the right investment mix, and more. Order now. Retirement Reality Check. Call Josh at 888-988-JOSH. Let Josh help you map out your retirement using fresh strategies. Call 888-988-5674. That's 888-988-5674.
Okay, we're back. This is Josh Jalinski, the financial quarterback, with Dr. Lacy Hunt. So it seems to me that one of the only ways to stimulate the economy would be to have a lot more babies. So luckily I have 6 kids, but I'm a little abnormal.
Well, babies, population growth and babies, family formation are very stimulative to economic activity.
So we should be giving monies to people who have babies, or to encourage that.
Well, think about this. Think about the amount of household and business investment that is needed when you have a rapidly growing birth rate. You have to equip the babies with a lot of things. Firms have to rev up production, and then in time you need more schools. You need a whole host of things. And so, for example, in the 50s, 60s, and 70s, when the economy was very lightly indebted, we had very positive demographics, and we had very healthy investment. Japan, the population is declining. Same is true in China, in my opinion. And so you do not have this demand for investment, household and public investment. And so, although there would seemingly be a shortage of people, the more powerful effect is the depressing effects on investment. And another way of thinking about this is to recall your production function from economics, which is universally applicable, which says that economic output is determined by technology interacting with land, labor, and capital. So the marginal revenue product of debt capital is falling because we're overusing it. And so that triggers the law of diminishing returns. But one of the consequences of the poor rise in the standard of living is that we have deterioration in demographics globally. There are some pockets, but the global population last year was the slowest growth rate since the 1950s. And in the major economies of the world, China, Japan, Europe, and the United States, the demographics are absolutely horrible.
What about this year?
When you don't have...
What about 9 months after March 2020? Have we seen a little boom?
Well, they expected, there were a lot of cute articles that with everybody in close proximity, that the number of births would go up this year. But we already have the tabulation from 5 states, including California, Florida, and Arizona, and a couple of small states. And now we do have to allow for the 9-month factor, but the numbers are in, and in just those 5 states, the number of births was 50,000 fewer than a year ago. And that doesn't surprise me at all, because economics is a major determination. And it was a bad year for the economy last year. People were uncertain, and they did not have babies. And we have numbers that have come in for about 8 or 9 other countries, and in every one of them, the number of births fell.
Yeah, I have another theory. I have another theory about that. The number of divorces, I think, went up. I mean, I think people couldn't stand living together. So rather than, I don't know if is there any economic number on divorces? A rise in divorce?
Interesting idea.
Yeah, that'd be an interesting study. So we'll be back with concluding thoughts with Dr. Lacy Hunt, Executive Vice President, Chief Economist of the Hoisington Investment Management Company, when we return. 888-988-JOSH, 888-988-5674. We'll be back after these messages.
Hey, meet you out on the first tee?
Yeah, 45 seconds. Right there. Just reading this article.
On what?
New bill Congress passed. Looks like it's going to affect the value of all retirement savings plans. My financial guy didn't tell me about this when I saw him the other day.
Well, my guy did, and we made a plan. You may have heard of him, Josh Jalinski.
Josh Jalinski is your guy?
Listen, if you're 10 years or less from retirement,
which I am,
Josh will give you a free economic plan, which includes retirement planning, a 27-point checklist to make sure your income lasts as long as you live. He'll even help you navigate the current tax code.
I'm definitely going to call Josh.
Cool, but first, can we play some golf?
Call Josh Jalinski, host of the popular Financial Quarterback radio program, for your free economic plan. 888-988-JOSH. 888-988-JOSH. 888-988-JOSH.
And go.
Okay, we're back with Dr. Lacy Hunt. So concluding thoughts. So what do you like besides treasuries? Actually, what you've been saying may be an interesting case for Bitcoin. Not that I'm necessarily a Bitcoin bug, but if you have this further stimulation, this kind of fake stimulation, modern monetary theory is on the horizon, adding zeros, that money might get sucked out into some fake other economy. That might be very bullish for Bitcoin. What do you think about that?
Well, here's the basic problem. I mean, for a long time, as our growth rate has come down and as our debt levels have risen, people have projected that the U.S. dollar would fall. However, Europe, Japan, and China have been taking on debt at faster rates. And so, generally speaking, not every quarter, not every year, the United States growth rate is coming down, but there is faster deterioration in our major trading partners. And as a result, the dollar has held its value. And, there were, at the beginning of this year, there were many projections that the dollar would fall very precipitously. And, but yet the dollar is higher now than it was at the end of the year.
So that's a positive thing. We're still the cleanest dirty shirt in the laundry pile.
Absolutely. Well said, Josh.
So that's some hope there. So you like treasuries still. Do you like anything? You think, I guess by what you're saying, Bitcoin is a mirage. Although
it's a reflection of the excess liquidity.
Yeah,
and
but
so
if there's going to be greater excess
extra liquidity, you look for things. You're willing to put some of the liquidity to work because the prices of financial assets are forcing down the returns, which makes it more feasible to invest in more and more ephemeral things. That's the way I would look at it. I'm not saying that that's the only interpretation. It's my interpretation.
Yeah, you're seeing that with pensions, insurance companies, things like that. Very wealthy people buying, $80 million homes in Palm Beach. They're just looking for places to put all this excess liquidity. And
one of the things that these policies, these high debt policies, the policies quantitative easing or asset purchases, and excess liquidity, which leads to the bidding up of financial assets and homes and so forth. Those policies, which are designed to help ordinary folks, actually worsen the income and wealth divides, because the bulk of these more risky assets are owned almost entirely by the most wealthy of our families. But the ordinary folks invest in their main source of income is their bank deposits and so forth, which is yielding close to zero. And so the policy machine benefits the high end and harms the more moderate end. And so as the growth rate has come down,
1 minute.
we've exacerbated the income and wealth divides. In my opinion, the main reason this has happened is a failure of monetary and fiscal policy. But unfortunately, to solve the problem, we're taking on more debt, which then even makes the problem worse.
So it sounds like the solution really was last year with COVID. If we just let everything slide, but people don't want to do that because then rich people would lose their beach homes.
30 seconds.
Almost like a different great reset than what we've heard about. So Dr. Hunt, you can find out more about his work. What's your website, Dr. Hunt?
It's HoisingtonMGT.com.
HoisingtonMGT.com. HoisingtonMGT.com. Thank you for joining us, Dr. Lacy Hunt. Folks, give us a call, 888-988-JOSH.
10 seconds.
For your no obligation consultation, 888-988-JOSH. And you get a free 45-minute strategy session with our team. Thank you, Dr. Hunt, for an enlightening interview. 888-988-JOSH. 888-988-5674. 888-988-JOSH. We'll be back after this.
WOR and WAXQ HD2 New York.
Unprecedented coverage for these unprecedented times. You can depend on us. We are the voice of New York. 710 WOR.
An iHeart radio station.
56 degrees at 10 o'clock. Good morning. I'm Paul DeCastro. A troubling increase in the number of coronavirus cases across the nation. ABC's Christine Sloan has the details.
An alarming figure. New coronavirus cases in the country now topping 75,000, 2 days in a row. Pfizer now asking to extend the emergency use authorization of its vaccine to children ages 12 to 15 after the company reported it was safe and 100% effective.
And the race to vaccinate hitting a bump in the road as the supply of Johnson & Johnson vaccines will decrease across the country big time. Supply will be down about 85% next week. This past week, nearly 5 million doses of Johnson & Johnson were distributed, but J&J says it'll only be able to deliver 700,000 next week. New Jersey Governor Phil Murphy and First Lady Tammy Murphy are now recipients of the vaccine after getting the shot in Atlantic City yesterday. Each became eligible on Monday when the age-based group was dropped to 55 and over. Governor Murphy and his wife also had a chance to tour the AZ mass vaccination site. Casino workers among those as well that got the shot. As of yesterday, Coney Island amusement parks are open.
Luna Park and Dino's Wonder Wheel was shut for the entire season last year because of coronavirus, but Senator Diane Savino, who represents Coney Island, says
it will no longer be silent in Coney Island. The children will scream again in joy.
Hundreds of employees have been brought back. Alessandro Zamperla owns Luna Park and says this moment is a message of optimism.
It's a very emotional day. We want to really spread positivity. It's been very, very tough for every one of us.
The parks are limited to 33% capacity and face masks are mandatory. Both parks have new rides this season. I'm Scott Pringle, WOR News.
In sports, in case you missed it, last night in Arlington, Texas, San Diego area native Joe Musgrove was 1 out away from pitching a no-hitter for the Padres.
The big right-hander ready and delivers. Swing and a ground ball to shortstop. Kim has it. Friendly hop. Throw to first. That is a no-hitter, and that is history. Joe Musgrove with the first no-hitter in Padre history.
And the call on KWFN as the Padres beat Texas 3-0. Musgrove, a lifelong Padres fan, becoming the first pitcher in franchise history to throw a no-no until last night. The Padres had been the only active franchise without a no-hitter, and they've been around since 1969.
Here's your WOR Weather Channel forecast. Expect clouds through this afternoon with a high of 63 degrees and overcast conditions tonight with showers developing late as the low drops to 56. A wet and cooler Sunday with showers likely, maybe in a few rumbles of thunders. The high approaches 59. Rain ends early Monday, then cloudy with a high in the mid-50s. I'm meteorologist Jeff Marr.
Next news at 11. Start your day with Len Berman and Mike Garrido in the morning, 6 till 10 weekdays. I'm Paul DeCastro and 710 WOR, an NBC News radio station.
Tired of losing money in the stock market roller coaster? Frustrated with the government taxing you into oblivion? Worried about inflation? How do you prepare for so many financial uncertainties? Welcome to the show that will help you develop your game plan. The Financial Quarterback with Josh Jalinski. Josh is a noted financial advisor and president of the Jalinski Advisory Group, and he's here to answer your questions. Call into the show at 800-321-0710. 800-321-0710. Now, let's kick off your financial future. Here's Josh Jalinski.
The Financial Quarterback coming to you live with all of your questions at 800-321-0710. If you have questions on stocks, bonds, mutual funds, annuities, this is your favorite hour. You get to ask me any financial question you have. And we have a special, you get an income for life blueprint. It's a real blueprint. I don't know if you can zoom in on that. At no charge when you schedule and keep your no obligation review. So many of you want to know, how can I have income that lasts as long as I live? And if you request a free copy of the book, you get this, by the way, when you schedule and keep your no obligation review at 888-988-JOSH. You will have an excellent overview of prospering and potentially even thriving during your retirement. So are you serious about planning for your retirement? Call us now, 888-988-JOSH, and we will detail step by step what will happen to your income at 66, 67, 68, 69. If you want to retire at 55, 65, 71. And then we'll give you a spreadsheet of your life with various variables factored in, how you are going to get multiple streams of income. Here's the thing, the Lacy Hunt interview, he's fantastic. He's probably the best economist. I would pick him to be the Fed chair in a heartbeat, but he's depressing. So what do? We take action for what little we can, our own personal economies. Here's the beauty of all of this. We have to educate kids on sound money. Folks, we have a whole generation of kids who will be failed by MMT. Think about this. In 2008, 2009, President Bush and then President Obama, what's interesting here is we had, remember a couple of weeks ago, or maybe it was a week ago, we had a guy call and he was kind of depressed at the state of the world. And I don't know, I wasn't sympathetic and I'm sorry for that. But my point was, we have to see within ourselves to critique, are we living by our first principles? And think about this, in 2008, had a Republican president, Republican Congress, and they spent $1 trillion. In 2020, rather than truly testing fiscal austerity, now everybody would have hated it, to be honest, and President Trump would have probably still not been reelected. But you know what? It would have created such an economic boom had we embraced the fiscal austerity. But what happened instead? We kept rates artificially low, and now Larry Ellison bought an $80 million beach house in Palm Beach. So what happens when you have these imbalances is Granny suffers because Granny can't get a 5% CD anymore. Think about who hurts when we have interest rates artificially low. And always remember, it was during Republican presidents that we did this. Now, Democratic presidents haven't been any better. It's sort of like they put the pedal to the metal and go even a step further. And we may be going a step further. If Bush spent $900 billion and Obama and Trump spent $9 trillion, what will happen next? At the next crisis, I think we will have adding of zeros. If we do, folks, that could be very hyperinflationary before the deflation. See, that's the thing that I see that may be a little different than Lacy Hunt. I see an inflationary hyperinflation before a deflation, a stockflation. So stocks could go up, which would be good. Asset classes could be going up, which could be good if you know when to get out. If you have a tactical money manager. No guarantees on that, but folks, see, the thing is, diversification is not merely like, a myth. It's because we don't know what the heck the outcome's going to be. So you can have certain assets that would perform well in a deflationary environment, certain that will perform well in inflation. They generally don't both perform well at the same time. That's the real intent of diversification. And I don't mean like having a bunch of different mutual funds or having a bunch of different symbols. I mean just having certain assets that are inflationary, certain that are deflationary. Folks, give us a call now, 888-988-JOSH, for the free Income for Life Blueprint when you schedule and keep your no obligation review. The book covers in depth what you need to do and not do to live your retirement years on your own terms, and hopefully to reduce stress as well when it comes to financial stress. A lot of people, by the way, got divorced. I want to know that. Google that or something. Maybe Ernesto could or Cal. Cal, look up the amount of divorces due to COVID.
I can tell you a lot
relative
of my friends
year over year. Yeah, I can tell you people I knew more got divorced, it seemed. Everyone was just getting divorced. But here's the thing. Is it because we've lost our first principles? All of these, we need to have another baby boom. We need to have strong families, strong marriages, and a healthy economy. So what do? Invest in psychology and marriage counseling. So what do you find, Ernesto?
It turns out that both marriages and divorces plummeted. I think it's because an expense, a marriage or divorce is an added expense.
I wonder about divorce, though, this year. So I wonder if you'd had an increase in separations. I just know everybody I heard was getting divorced. Not everybody, but it seemed like more than normal. I don't know. So give us a call, 888-988-JOSH, if you want the free Income for Life Blueprint. Also, call me right now, 800-321-0710 to ask us any financial question you have. There has been so much happening in the world of finance this week. Number one, Peter Thiel comes out. Now, Peter Thiel, or Thiel, I forget how you pronounce it, is a pro-crypto Bitcoin maximalist. Well, what the heck does that mean? He believes that all of the money printing necessitates a sound economy. And this is why the U.S. has better get their act together when it comes to debt. Because you have all these super wealthy people who are now creating this other asset classes and regular people called Bitcoin maximalism. It's the belief that all other cryptos are kind of a waste of time. We're just going to put all of our chips in. We're not going to believe in Ethereum. We're not going to believe in Litecoin. We're going to believe in the 21 million instrument currency known as Bitcoin. And that's what they believe is their sound money. Now, we're not recommending you buy or sell Bitcoin over the air, but it's an interesting phenomenon. And what the Bitcoin bulls have not answered for me yet. So if we have a Bitcoin bull on who wants to call us, he revealed some shocking things about how he thinks China will be manipulating the Bitcoin market with $7 billion. And I actually entered into a Bitcoin chat room, and I mean, I would be a Bitcoin maximalist, I guess, because to me, all these other coins really don't have the strength of the network, the consensus, the fungibility There are just some fascinating things with Bitcoin that really, some of the other ones seem kind of fraudulent. Although Ethereum has some applications. But basically, when we're talking Bitcoin, nobody's listening to the real critique that Peter Thiel is mentioning. Peter Thiel is saying China could basically create $7 billion in their economy. And they could say to their military, create Bitcoin. Not to hack Bitcoin. So a lot of the Bitcoin bulls said, oh, it can't be hacked because the strength of the network, which I would love to get a Bitcoin bull on to talk about how that can even be happening. But essentially, due to the power of encryption and that everything's open source, you could see if there's any fraud. Think of a chain, and there's different chains in the code, and everybody can visualize what's going on in Bitcoin. So there's a website. By the way, it's not private. That's the other thing. People think Bitcoin's private. The government will know everything you're doing with Bitcoin. They have something called Bitcoin chain analysis, which the IRS is learning about. So where you can, in a sense, see what's going on. Now, they would say that doesn't matter because it's still a store of value. So it's not about privacy. It's not about money laundering. It's about seeing that I give money to Ernesto and there's no fraudulent conveyance. But there could be liens. So there's a lot of interesting applications to Bitcoin and problems with Bitcoin. But Peter Thiel brought up the biggest one, which was, couldn't governments put all their resources into mining Bitcoin? And maybe that's why China is so interested in Taiwan and all the chips that come out of Taiwan. What if China said, you know, we're going to remand all the chips from China that are used to create Bitcoin? I think it could be a national security interest of America to start making our chips here in the U.S. Remember what happened when you needed a mask? Where was the mask? I still can't get a 3M mask. Apparently, I mean, so this is very big, people. I'm a believer that COVID, I've said this from the get-go, had certain issues and certain attributes of almost like a biological weapon. You cough, and then like somebody 6 feet can get it. Harvard did a study that said the only way to stop it is to wear an N95 mask. That study kind of quickly, nobody talks about. But whatever it was, whether it was the Wuhan bat market, that was one theory of origins, bioweapon, another theory of origins. Another theory was it kind of accidentally got out of a lab that is trying to save humanity with vaccines and all this other stuff. So whatever the origins are, is pretty weird stuff. You're coughing and the droplets pass, so you need a mask to block it, fine. But then we can't get the masks. You still can't get the masks. The only way I can get the mask is if my doctor friend gives me a beautiful 3M mask. Thank you for listening. So we need to, one, increase manufacturing. Now, Tom Clancy, who's our CCO, says they did increase manufacturing. I know they did for the medical community, but we never found it. So we never, can you buy an N95 mask at Home Depot anymore, Ernesto?
I live a mask-free life.
Okay, well, you're getting away from me. So I'm keeping my distance from you. So, you know, so anyway, that's not my point. My point was that the masks were to save us, and it took us a year, and you still can't buy a mask, a real mask, that blocks the droplets in the store. I think that's a very real concern. Now, there's chips that help us create and mine Bitcoin. The vast majority of those chips come from Taiwan. Is that why warplanes were flying over Taiwan? Now, Peter Thiel this week says $7 billion could. Now, people in the Bitcoin community were saying, no, it can't be hacked. That wasn't the issue he was bringing up. He was bringing up that it could be created, which would suck money from the U.S. economy thereby reducing foreign independence on the U.S. dollar as a world reserve currency. So if Bitcoin becomes a reserve currency, U.S. isn't, and China doesn't have a lot of debt. They have some debt, but if they start mining Bitcoin, then that's a way they can break U.S. hegemony. So interesting point. I don't think people really got his point. So we'll talk about that. If you have any questions, call us 800-321-0710. When we return, we'll be taking your calls on all matters financial, 800-321-0710. We'll be back after these messages.
Are you worried about the recent coronavirus crisis and how it may have affected your money? Hi, everybody. I'm Josh Jalinski, the financial quarterback, inviting you to join me for my complimentary 6 Ways to Keep Calm During Turbulent Markets webinar. If you schedule and keep your no-obligation webinar today at 888-988-JOSH, it's a great thing to do. If you're stuck at home under stay-at-home orders, call us right now, 888-988-JOSH. If you're bored, there's never been a better time to get a second opinion on your wealth than right now. 888-988-JOSH, 888-988-5674. And go to my website, retirementrealitycheck.com today and take your free investment profile quiz. And when you buy my book, you're eligible for 3 free gifts. 888-988-JOSH.
Call Josh Jalinski, host of the popular Financial Quarterback radio program, 888-988-JOSH.
Josh Jalinski, the financial quarterback here. In these uncertain financial times, it is imperative that you guard your financial future. If you call within the next 3 minutes, we will offer our complimentary bear market survival guide, which will detail steps to help your plan to potentially survive the COVID-19 crisis. The bear market survival guide will cover how you might still be able to retire amid a volatile economic climate. We will throw in our complimentary 27-point ultimate game plan for retirement. Call us at 888-988-JOSH, 888-988-5674 for your bear market survival guide.
Call Josh Jalinski, host of the popular Financial Quarterback radio program, 888-988-JOSH, 888-988-JOSH.
This is Josh Jalinski, the financial quarterback. JJ, the CPA, is watching, and he says, "Good morning, my brother. On Bitcoin, FYI, the IRS requires now directly on Form 1040 to simply answer yes if you are invested in it. Although there was some debate because on the IRS.gov FAQs, it seems to contradict that. So I'd like your take on that, JJ. So Howard writes in our YouTube chat, will U.S. exports grow with growth in emerging markets? What about economic and productivity growth through new technologies such as robotics, the Internet of Things, 5G, and artificial intelligence? I'm with you, Howard. I think all of those things are positive. So you're going to have this two-world dual economy, and that's precisely why we'll need to have eventually universal. I don't think we need to have it, universal basic income. I think we're sort of destined to have it because people were not brought up with proper sound economics. Folks, in the Bible, it talks about a barrel of money will buy a bushel of wheat potentially. And we could be there, in a very short time. Because think about this. How much does it cost to buy bread now? Like $5. If you buy some good bread, it's like $5. You used to be able to go to the Arnold day-old bread store and you could even buy, 99-cent. There's still one, I think, in Tom's River, but they're very few and far between. So JJ said this. Oh man, he's doing some great live tweeting. I guess it's not tweeting, but in the YouTube chat room, any virtual currency, Form 1040 asks a question. At any time during 2020, did you receive, sell, send, exchange, or otherwise acquire any financial interest in any virtual currency? Wow. And that's a big thing, folks. So And you might say, well, I thought Bitcoin was private. No, it isn't private. It's all open source technology. You can go to a website, by the way. It's kind of cool. It's called corn.lol, and you can see every transaction in Bitcoin. It's anonymous, but isn't that a very easy step from the IRS doing chain analysis to see who bought the Bitcoin on Coinbase, who bought the Bitcoin on Binance? So it's remarkable. What is remarkable about Bitcoin is the transparency. So there will be no hidden economy. It's actually, in some way, it's the government's dream if they ever wanted a transaction tax, because it could still, in some sense, maintain liquidity, but snuff out a cash economy. Bitcoin just went over 60,000 last night. And you see all the trades. So on corn.lol, for laugh out loud. So somebody right now just sold $253,000 worth of Bitcoin on different exchanges. It's pretty fascinating, the level of transparency in trades. And you can see liquidations and things of that nature. So give us a call, folks, 800-321-0710. If you have any financial question, it could be on annuities, insurance policies, Bitcoin, stocks, ETFs, income for life planning, whatever question you have. No question is a dumb one except the one that you do not ask. So you know what? You know your kid in your basement who's now a Bitcoin millionaire? The IRS will come find them. They're doing chain analysis. It's interesting that you could lower Bitcoin. Could be revolutionary. Here's why. Imagine if every financial transaction was taxed with a financial transactions tax. It could be a very easy way to institute a national sales tax, a national transaction tax. So let's say you abolished income tax, like you just abolished it. Abolish sales tax. And you just had a 1% tax or something anytime money changed hands. That could be a great way to not hurt people, but get rid of all their taxes. But that's not what the government will do. We actually had a guy who came on the show, and he wasn't like conservative, but he said if you got rid of all taxes and you replaced it with like a half a penny or something tax, you on all the hidden economy, you would basically, meaning like, Bezos gifting shares of stock to his charitable trust or whatever, or money changing hands. Anytime someone bought, a $60 million art piece to generally evade estate taxes, let's be honest, that's kind of what it's there for. I don't agree with that. I'm just saying that's what super rich people do. They'll buy, it's hanging in my, and now the piece of art is owned by the Pew Charitable Trust. No offense to the Pew Charitable Trust. I'm just saying just general charitable trusts. But it's really some rich guy likes a painting and it's $60 million for this painting. And then they bought it and now it's owned by a trust. It's for the good of the children who can enjoy the beauty of art. But it's sort of, a way to have the super rich not pay, you know what I mean? Estate taxes. So if you had this half a penny tax, I would only be for it if every other tax was eliminated. The property tax, income tax, probably not going to happen. They'll probably try to get it on anyway with some type of wealth tax. So it's interesting. I'm looking at corn LOL. So there was a sea of red. So all these people were selling. Now all these people are buying Bitcoin. It's interesting. And you can look at it. Corn.lol. What is the utility of it? Or that's the point, really. It's sort of people saying, I'm sick of Wall Street controlling my money. I'm sick of financial engineering controlling my money. So I'm going to control it with a bunch of people who believe in sound money. It's kind of like a libertarian currency where everyone is mutually agreeing that they're believers in sound money. So if everybody who believes in sound money sucks out money out of the traditional system, it's going to be very bad for the U.S., by the way. This isn't going to end well. And if Peter Thiel is right, the $7 billion that they mine, so he's basically saying, imagine a government spending the equivalent of a military budget to mine Bitcoin, not to break the chain, which apparently is unbreakable or something like that. And the theory goes, if somebody was that good where they could break the chain, they would actually spend all that time investing in mining Bitcoin, so they'd be like a Bitcoin millionaire. So why break it when you could, in a sense, mine it, and the act of mining makes the code stronger and more unbreakable. So there's some interesting theories there. It's already 60,550. This is crazy. It's a nothing asset. And that's how much the U.S. has fallen, that people have lost faith in it as the world reserve currency standard. But we're still the cleanest dirty shirt in the laundry. Okay, so JJ the CPA, I really want to talk to him now. He's chiming in on the YouTube. He goes, Form 1040 instructions exclude the narrow description. But my question to you, JJ, if you want to chime in on the chat box, is there is some FAQ on question 5 on the irs.gov website, and it says, no, you don't necessarily have to. I'll have to look at it. But if you go to the IRS FAQ on Bitcoin, and I'm not giving financial advice, but they, on March the 3rd, they have frequently asked questions on virtual currency transactions. And question 5 says the 2020 1040 form asks whether at any time did you receive, sell, send, exchange, or otherwise acquire any financial interest in any virtual currency. During 2020, I purchased virtual currency with real currency and had no other virtual currency transactions during the year. So if it was your first time ever buying Bitcoin and you did it with real currency, must I answer yes to the Form 1040? And here it says no. If your only transactions involving virtual currency during 2020 were purchases of virtual currency with real currency, you are not required to answer yes. So what do you make of that, JJ? I want that in the box when we're done. But first, we have Anthony, who is puzzled why his grandkids invest in Bitcoin. Anthony, come on. You're on the Financial Quarterback radio broadcast. Go ahead.
Thank you. Josh, I have 5 grandchildren. They're all college graduates. They're all intelligent, and a lot of them are in finance. They're all in Bitcoin, and they're all looking to retire when they're between 40 and 50 years old. They all have Bitcoin. You can't say a thing against them. They know Bitcoin backwards and forwards. What do you do in a case like that? Is it real? Isn't it? You can't get an answer from anybody. No, I'm just wondering whether Bitcoin has any value. When you hear it on radio or television, they're in the thousands of dollars, one Bitcoin.
Well, it has value just like the U.S. If people believe it to be valuable, it could be. So they could be right. They could be wrong, and it could be devastating. So what do you make of that? I mean, I think Apple was a cult. Amazon was a cult. Tesla was a cult. Bitcoin is a cult. Cults go much further than people want it to be. The idea,
True.
Is it's risky, but there could be opportunity. It's a volatile, and they believe it's volatile, but not risky. Does that make sense? They believe the price is going to fluctuate.
Oh, they do.
But they believe
You're
that
right
over
there.
10 years, it's going to be $1 million a Bitcoin.
Yeah.
That's their belief.
And they all have, the ones that don't have the cash, they own pieces of the Bitcoin now.
Yeah, they're called
be
sats.
into it.
They have satoshis, which is a fraction of a Bitcoin. Here's the thing, though. If Dr. Lacy Hunt is right and the whole world starts going to hell, you bet as anything they're going to try to convert those satoshis to dollars. And that's where then, once people start heading for the exits, that's when you could see a problem.
Bitcoin disappear, huh?
I don't know about disappear. I think it's here to stay because people's faith in the dollar as the world reserve currency standard is going lower. And I think governments are going to fight it and then embrace it because then they can trace it. There's going to be like multi-millionaire companies, billionaires, who create like the Facebook of chain analysis, where they're going to map your Facebook to your VPN, and they're going to figure out who bought what, where. So everything will be a matter of public record, what you did, and the government will, in a sense, embrace it because it will be a way to lower financial crimes. We're not there yet, but that's where I think it could be headed. That's why President Biden made a pretty good move when he picked the SEC chair from MIT, who's an expert in Bitcoin. He wasn't a Bitcoin denier. He was actually has a great course. If you don't know anything about Bitcoin, YouTube the Gary Gensler YouTube on Bitcoin. He has a MIT style class on it, and people really believe in it. But if you need paper, toilet paper, right? Maybe more valuable than Bitcoin down the line, or a stake. So, it's definitely a risky a volatile proposition, because it's something where you have to have mass belief, and you have the Bitcoin religion, and then you have the Bitcoin deniers who will win. Well, who won with the Tesla cult? Who won with the Amazon cult? I mean, Amazon did not make money for years. People said, oh, it's not possible. It's not possible. They revolutionized commerce. Really? I mean, and everybody chastises Amazon, but we still buy from them because I want it today. I want my good or service. So it's interesting. Very interesting. Any other comments on that, Anthony?
Yeah, I was going to say, what could possibly, what would be the main thing that could go wrong with Bitcoin? Is it something the government can take over?
Oh, well, the government can't take it over, but they could increase supply. They could say, hey, we're going to remand all the chips and we're going to mine it in the interest of national security. You can do a lot in the interest of national security. That's why, but the Bitcoin bull would say, well, if they're doing that, well, then it's going to strengthen the value of the old Bitcoin I had. So interesting comments. And folks, that's why you need a financial planner in these uncertain times. Someone who can look out for everything. But what's kind of interesting, right? The two things you want to ask the Bitcoin people is, it used to be that Bitcoin was supposed to be anonymous, private, like cash, and it's really not going to be that. That's, I think, the biggest flaw of Bitcoin. Second biggest flaw is that it can be mined. So the idea was that there was a limited fixed supply of 21 million, but it can be mined. So when you put quantum computing and supercomputing to mine it. But anyway, this is interesting discussion. Call us 888-988-JOSH if you want the free review. Remember, we're giving away a wonderful time together. It will not be a sales pitch. You will get real world value. We will map out an income for life strategy, and you'll have a simple decision to make. One, you'll thank me and want to implement the strategy we've developed on your own. You want to maybe rip me off, and that's okay. We offer you a free hour at no charge. Or two, you will want my help implementing the strategic income for life blueprint that we will give you at no charge. If that's the case and we're a good fit, great. That's how I grow my business. But if we're not a good fit, that's fine too. Sometimes we work great, sometimes we don't. It's part of life. Give us a call, 888-988-JOSH, for your special income for life blueprint. 888-988-JOSH. When we return, we'll take more of your questions at 800-321-0710. We'll be back after these messages.
It's always on your mind. Retirement, whether you're 55 or 35. Not everyone wants to work forever, and most would like a comfortable retirement. You may already have a plan, but is it the right one? Josh Jalinski, host of the popular Financial Quarterback radio program, is ready to guide you towards financial freedom. He challenges the ways your parents and grandparents saved money with fresh strategies, which are exactly what you need to navigate today's volatile economic climate. Josh's new book, Retirement Reality Check, is available to order on Amazon. It's an easy read that guides you through his system for securing your financial freedom, including tax-saving strategies, understanding the right investment mix, and more. Order now. Retirement Reality Check. Call Josh at 888-988-JOSH. Let Josh help you map out your retirement using fresh strategies. Call 888-988-5674. That's 888-988-5674.
Our beloved callers calling in with their questions at 800-321-0710. What did JJ say? JJ, the CPA, if your only transactions involving virtual currency during 2020 were purchases of virtual currency with real currency, you're not required to answer yes to the Form 1040. So I'm right there. Am I not, JJ? So very interesting. Greg said, I'm investing in a jar in the backyard. What's the best jar to use? He said the mason jar. I would agree with that. Mason jars are great. I used to ever make kombucha? Kombucha is an amazing tea made with a SCOBY, which stands for a symbiotic culture of bacteria and yeast. The only side effect of a SCOBY, I love the taste of kombucha. I love the taste of kombucha. But it has a negative side effect that you can all Google. It was making me itch. So I had to stop. But I love the taste. I do not like store-bought kombucha. Store-bought kombucha tastes disgusting. But if you do real kombucha, it tastes remarkable. So Unka says, this is not just a business, it is a ministry. That is true. We do this for love, not money. Because I guess for money, I would just be working with my clients all morning. So that's what I might do. If we don't start getting more of you calling, I'm going to cancel the show. Call us at 888-988-JOSH if you like the show. So Greg worked for my grandmother. She made money during the Depression in the backyard. See, I do believe that these kids today are going to change society for bad and then better. Here's what I mean. So think about it. You have a whole country where we've brought up our kids on financial engineering. And the ultimate financial engineering tools are BitCoin and monetary MMT. And they're two opposed views, by the way. Bitcoin believers are believers in sound money. Bitcoin deniers are believers in MMT. Who wins? I think MMT wins at first, then maybe Bitcoin wins in the end. MMT says, when we have a crisis, we're just going to start giving people money. It was like last year. People sat at home and collected checks. What happens when the economy doesn't get better and Joe's Pizza doesn't open up anymore and you can just go on your phone, type in a button, and get a pizza arriving from Amazon? That's just as good as Joe's. Eventually it'll be there, right? So, what do we have? I want JJ, I have a question for JJ, the CPA, on the YouTube chat. If your only transactions involving virtual currency were purchases of virtual currency with real currency, you are not required to answer yes to the 1040 form. Some people say that's only like coin joins, or if you, let's say I have cash and I give money to Ernesto for his virtual wallet. Some are saying it's not when you buy it off the exchange, because you're essentially, before you take possession of the Bitcoin, you are buying through the Winklevoss twins. I mean, this is how crazy our world is. You know, the Winklevoss twins, who were last known for getting for suing Mark Zuckerberg, are now going to be probably maybe even richer than Zuckerberg for their investment in Gemini, which is one of the few transaction portals, by the way. And this is the other thing. All these, tell your kids this. When they buy Bitcoin, the Winklevoss twins send that data to the government. So when you buy on Binance or when you buy on Coinbase, all of that's tracked. And so they're going to be very rich people because they're going to give that money to the government, like probably Big Data gave money to the NSA, you know. So you wonder, it's interesting. There are problems. That's why investing's a risky proposition. So, JJ, what do you say about that? Okay, Rufus is saying, wonderful show. My parents are watching. Hi, Polly. We love you. Okay, so next up, and Rufus says Dad, who's a great man as well. So we have some great comments on the YouTube channel going. We're going to go to the phone lines. We have Joseph with a problem with his life insurance. Go ahead, Joseph.
Yes, good morning.
Good morning.
I have a question that I ordered from you a few weeks ago about life insurance.
Sure.
Which I have. It can be thrown in a long-term, okay?
Sure. Yeah, thank you to bring us back to the real world. We were talking about deflation, then we're talking about Bitcoin, now we're talking about life insurance. So go ahead. I prefer these questions.
What it is, I have about $40,000 cash built into the policy, and they're telling me at age 82, the premium will start to double. And by age 90, it will be nothing left.
Yes.
So if I could turn in a long-term care, if it is any way to do, it will be helpful.
How old are you?
73.
So at 73, you may be able to convert that to a life insurance policy that is a fixed cost of insurance. The type of life insurance that you have has a rising cost. So the longer you will live, this is why those people that I call termites, who only invest in term, are misguided. Because there will come a time when you're 73 and you love your kids, you love your grandkids, and you know what? You want to give them maybe Bitcoin when you die, but you want to give them cold, hard cash that's tax-free. You might opt for life insurance. So the problem that you have is you have either term or you have universal life with a rising cost. Yes, so there is something called whole life or a fixed cost insurance where the costs can remain fixed. So I would look into 1035 exchanging. I'm not recommending this because you got to take a physical. You got to be insurable. You don't want to cancel the policy if you're uninsurable. You don't want to cancel the policy if the one you have is better than the one I can get you. But call us now, 888-988-JOSH, 888-988-JOSH. JJ is now live tweeting on my chat rooms. Guys, go to the YouTube Financial Quarterback. He's now breaking news on our YouTube chats. EIDL application due date is extended to December 31st. PPP application date extended to May the 31st. JJ, we got to have you back on again soon. There's a lot going on. You no longer need to wait 8 weeks to apply for draw 2 after draw 1. So that's you, Ernesto. You got to get draw 1 and you got to get draw 2. And you might say, well, you're against government handouts. Yes, but it's all going to, Our tax dollars support it. So did you apply for PPP-1 yet, Ernesto?
I'm in talks with my bank, and we're working through it right now. And if it wasn't for you and JJ, the CPA, I never would have considered it.
Thank you. Make sure you do draw 1 and draw 2. Now you can do it. And apply for the income for life scenario. And here's the thing. The importance of diversification is in a world gone mad. You have some assets for inflation, some for deflation. And you might say, well, what does deflation look like? March of 2020. That's what deflation looks like. There will come a time when the Fed will have no more tools left. We have about 2 more tools left. If you heard Lacy Hunt, he said it. Instead of being the lender of last resort, they could become the spender of last resort. Jerome Powell, for all the flack he got from President Trump, never was the spender of last resort. We got to give him credit for that. Number 2, because sometimes we're anti-institutionalists and like, oh yeah, the Fed, the Fed has issues, but he was a hero there. He did not spend, he lent. The government spent. But once the Fed gets into spending, he also tries to raise interest rates in December of 2018 when the economy was strong. I gave him flack. I really did, because it seemed politically motivated. In one sense, I'm thinking maybe we should have raised those rates after all. So it just seemed politically motivated. Like for years, for Obama's 8 years, we had low interest rates. And then all of a sudden Trump gets in, let's raise the rates, then tank the economy. But what I thought should have happened was this. They stop raising rates, but they don't lower them. What instead happened was they started lowering rates. So give us a call, 888-988-JOSH for the free review. We have Mike, who is a Bitcoin believer. Go ahead, Mike.
Okay. All right. Are we on?
Yes.
Okay. All right. Let me start by saying, we have a global economy.
No, we are in the blockchain. No, go ahead.
Okay. All right. So we do have a global economy. We all very aware of that, and it's been around for quite a while. It's time for a global currency. All right. And we've gone this far without one, but it's long overdue. I spoke to you a couple of years ago when Bitcoin was at about 4,000, and I remember you had a guest on there who was speaking about gold and different currencies. I don't know if you remember that. And at the time, I says, you guys missed the 8,000-pound gorilla in the room. And you said, oh, it's more like an 8-pound gorilla. Well, now it's a 60,000-pound gorilla and moving quickly. And I think the Jamie Dimon, for example, after bad-mouthing it, trying to push it down, and you turn around and J.P. Morgan is buying it up like crazy. So sometimes it doesn't pay to listen to these. You have to do your own homework.
No, I agree. But I remember that call, and I asked you what the blockchain was, and you never gave me a... I think the problem is a lot of people are speculating on Bitcoin to get rich rather than truly understanding the technology behind it. The problems for me with Bitcoin, and I'm not a Bitcoin disbeliever, it just has certain problems. I think at that time I was more against it for sure. But I would ask people, why should I believe in it? And their answer was the blockchain. And so it's basically we're trusting computer code with our money that could be manipulated potentially. So that's the problem for me. It's not that the strength of it is it's sound money by people who believe in sound money, right? So that it cannot be altered in supply unless you spend so much money on mining it.
But look at how much manipulating they're doing to the dollar. They're printing.
I agree with you. But I'm just saying, do you understand the code? But do you understand the code behind Bitcoin?
Sure, I'm a computer programmer. Okay, so I understand a little bit about code.
So with the code,
yeah.
So with the code, more mining makes it stronger.
Well, there are only 21 million coins. They can't print it like they do with fiat currency.
No, but they can mine it. which
Of
could
course they can
essentially
mine it,
be turn into the same thing when the U.S. government says, I have a national security interest. We're going to remand your mines in the interest of that. That's my worry.
But once the 21 million are mined, there's none left. That is it.
No,
that is it. That is the maximum.
Yeah, well, that's what they say. So we'll see. I mean, there's problems to it. There's promises to it. I'm not like Jamie Dimon. I remember you very well a couple years ago. I appreciate you calling it. No, yeah, they're going to buy it up. But the problem is then they'll still convert it to cash. And then will the government say we have a national interest in it? And there are problems. There are promises too, right? Sound money. That's a big one. By other believers in sound money. No, this is great. Thank you for the call, Mike. Do you know the answer about the code, though? Or no? Okay. Well, we got to go. We'll take our final break of the hour. Call us for the Income for Life review. Income for Life blueprint will be yours. You'll get a spreadsheet of your life. We'll organize you. And Mike, thank you for calling. I remember your call years ago because it set me on a path to learn more. So I learned from our listeners. So thank you, Mike, for being right when so few were wrong. But we'll see if you're right going forward. This is Josh Jalinski, the financial quarterback. Don't touch that dial.
Hey, meet you out on the first tee?
Yeah, I'll be right there. Just reading this article.
On what?
New bill Congress passed. Looks like it's going to affect the value of all retirement savings plans. My financial guy didn't tell me about this when I saw him the other day.
Well, my guy did, and we made a plan. You may have heard of him, Josh Jalinski.
Josh Jalinski is your guy?
Listen, if you're 10 years or less from retirement,
which I am,
Josh will give you a free economic plan, which includes retirement planning, a 27-point checklist to make sure your income lasts as long as you live. He'll even help you navigate the current tax code.
I'm definitely going to call Josh.
Cool, but first, can we play some golf?
Call Josh Jalinski, host of the popular Financial Quarterback radio program, for your free economic plan. 888-988-JOSH. 888-988-JOSH. 888-988-JOSH.
Are you worried about the recent coronavirus crisis and how it may have affected your money? Hi, everybody. I'm Josh Jalinski, the financial quarterback, inviting you to join me for my complimentary 6 Ways to Keep Calm During Turbulent Markets webinar. If you schedule and keep your no-obligation webinar today at 888-988-JOSH. It's a great thing to do if you're stuck at home under stay-at-home orders. Call us right now, 888-988-JOSH. If you're bored, there's never been a better time to get a second opinion on your wealth than right now. 888-988-JOSH, 888-988-5674. And go to my website, retirementrealitycheck.com today and take your free investment profile quiz. And
back in 10, stand by.
You're eligible for 3 free gifts. 888-988-JOSH.
Call Josh Jalinski, host of the popular Financial Quarterback radio program. 888-988-JOSH.
Okay, we're back. And then we're going to Hunter. He has a question on needs info on parent transferring a home to him. Go ahead, Hunter.
Good morning. Thanks for taking my call. I've been talking to my mother, and she wants to transfer her house over to my name. Is it better for me to just take over a new mortgage because there's a balance of $145,000, or should she put it in a revocable trust?
Oh, this is a great question. So should she put the house in your name or put it in a trust? I think she should. It depends on the capital gains. Do you know what the capital gains would be?
She's lived here for 65 years.
So she bought it for $30,000 and now it's $3 million? I don't know what.
Well, when she built it, she probably paid $11,000, and now it's probably worth between $400,000 and $500,000.
The best thing would probably do for her to keep it in her name or in some type of revocable trust, providing your attorneys and accountants agree, where then the asset would pass with a step up in basis. Now, you want to get certain legal and tax advice that I'm not giving you, because basically you have, and you want a financial planner, because sometimes people will say, hey, put the house in your name, and then you lose the biggest tax benefit, which is the step up in basis, which President Biden is trying to get rid of, but for right now, it's around. So unless they get rid of the step up in basis, probably keep the house in her name, and then when she passes, you would receive it with a step-up in basis, so you would pay no capital gains tax. But I would call us at 888-988-JOSH, because you do not want to go it alone in retirement. We'll help you with estate planning questions. And when was the last time your accountant, your financial advisor, and your attorney met and said, well, what is best for you? That's what we do with our unique financial quarterback trademarked process. Also, you have the Income for Life report, which will be yours free when you schedule and keep your no obligation review. So if you want that Income for Life blueprint, call us now, 888-988-JOSH, 888-988-JOSH, 888-988-5674. You will get a year-by-year breakdown of what you can expect in retirement, 888-988-JOSH.
The preceding program was sponsored by the Jalinski Advisory Group. Any awards, rankings, or recognition by unaffiliated third parties or publications, including 5-Star Wealth Manager, Advisory of the Year finalist by Senior Market Advisor, and Top of the $1 Million Roundtable, are in no way indicative of the advisor's future performance or any individual client's investment success. No award, ranking, or recognition should be construed as a current or past endorsement of Josh Jalinski or Wealth Quarterback LLC. Information regarding specific awards, rankings, or recognitions is available on the Wealth Quarterback website at www.jalinski.org. All investment strategies have the potential for profit or loss. Investment strategies such as asset allocation, diversification, or rebalancing do not assure or guarantee better performance and cannot eliminate the risk of investment losses. There are no guarantees that a portfolio employing these or any other strategy will outperform a portfolio that does not engage in such strategies. This broadcast should not be construed by any client or prospective client as a solicitation to effect or attempt to effect transactions in securities or the rendering of personalized investment advice. Due to various factors, including changing market conditions, the information discussed in this broadcast may no longer be reflective of current positions or recommendations. While information presented is believed to be factual and up to date, Josh Jalinski and Wealth Quarterback do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. The tax and estate planning information discussed is general in nature, is provided for informational purposes only, and should not be construed as legal or tax advice. Listeners should consult an attorney or tax professional regarding their specific legal or tax situation. Investment advisory services offered through Wealth Quarterback LLC.
WOR and WAXQ HD2 New York.
The information you need. The show